session reached characteristically a 2-month low. On a basic level, it seems that the negative correlation of the USD with gold's price still is the main factor behind the precious metals price direction. In this report, we aim to shed light on the catalyst driving the precious metals price and assess the future outlook. On the fundamental side, we know that the main issue tantalizing the markets is the possibility of the US defaulting and whether the White House could reach an agreement with Congress about raising the US debt ceiling, thus averting a US default. US Treasury Secretary Yellen last Friday warned that the ex-date is nearing updating the possible default date to June 5th. Yet, over the weekend, US President Biden and Republican lawmakers intensified their efforts and reached a deal for the rise of the US debt ceiling. Hence, the pressure is now transferred to Congress, where the deal is to be voted into law. Yet, the agreement seems to have created some backlash from more conservative US lawmakers, as well as former US President Trump and Florida Governor DeSantis, both running for the Republican nomination of the 2024 US presidential election. Should US Congress be able to pass the deal into law in time, we expect market nerves to calm, while should the Congress fail to do so, considerable upheaval should be expected in the market, which in turn could create safe haven inflows for the precious metal. Last Friday, the US core PCE growth rate for April was released and tended to pass a bit under the radar. The release showed that inflationary pressures within the US economy remained persistent as the growth rates accelerated both on a year-on-year and month-on-month level. The release may force Fed policymakers to maintain an intense hawkish rhetoric, implying that more rate hikes are to come, or at least that interest rates may have to remain at high levels for a prolonged period. Such a scenario would contradict the market's current expectation, which include another 25 basis point rate hike in the Fed's next meeting and rate cuts before the end of the current year. Should Fed policymakers decide to sharpen the hawkish rhetoric, we may see the USD gaining some ground and given the USD negative correlation with gold's price. Such a scenario may amplify the selling pressure on gold. Yet the next big test for gold's price is expected to be the release of the US employment report for May, due out this Friday. Expectations currently are for the NFP figure to drop from 253K to 195K and the unemployment rate to tick up to 3.5%. Should the actual rates and figures meet their respective forecasts, and despite the unemployment rate implying a relatively tightness of the US employment market as it remains at relatively low levels, the expected drop of the NFP signals the cracking of the tightness of the US employment market, something that may weaken the USD, while at the same time may cause Fed policymakers to hesitate. Should the overall release weaken the greenback, we may see it providing some support for gold's price. On the other hand, we have to note that the uncertainty for the actual rates and figures is high, and it will not be the first time that the actual data have disproven the prognosis. Hence, we may see wide volatility also affecting gold's price, and we would advise caution whilst trading near the time of the release. Thank you for watching.